What's up, my fellow traders? Hope you're all doing well and hope you're all having an awesome day. So a quick one here on nat gas, gold and crude oil, starting with natural gas. So before I start my video, let me show you what I've said in my last video so that you can understand the entries and conditions. Waiting for one of the entry condition, which is my bullish engulfer again, and my pin bars, one of the entry pattern. I look for my buy trade. Now I also want to prepare you for one more thing. If the price keeps on pushing down and goes equal to this wick, then it will become the double bottom pattern. Then it won't be a valid head and shoulder pattern at that point. If that happens, then we are not going to look for head and shoulder trade. Then in that case, we will only look for our double bottom trade. Nice one. So as you can see, we did not get any sort of reason to enter here in my termination zone. No bullish engulfers and no pin bars, no conditions, no entries. So at this point, I also said that if we do not get an head and shoulder pattern here in this area and termination, then we can get a possible double bottom. Now, as you know, I mark my zone rejection area, something like this, and let's remove this yellow box from here. So we have this rejection area. At this point, I'll be personally looking for my entry condition now with maybe a red and a green candle, because we already have this big red candle, so I'm not expecting a big green candle here. If that happens, then you know I enter with a 50% retracement. So I'm expecting a possible red and green candle. Wick can close below this rejection zone, but I don't want to see a candle close below. If that happens, then we have a continuation in a downtrend, and that is a signal that price wants to push down in a trend. So keep an eye here. Once we have a rejection and with a bullish engulfer or with a pin bar, all we need to see a bullish signal, a reason to enter. The very price action tells us that price wants to push up. If no reason, then we are not going to enter this trade. Now only going to take sell trade if we have a break and close below this previous low. Once that happens, then we'll have a signal that price will push down from here. So keep looking for good condition. Once you have that, we are good to go long using ATR for the targets. Let's check gold. Nice one. So as you can see, the price did pushed up out of my 50% retracement and out of my buffer zone. If you follow me, then you know I place my entries within my buffer zone, and 25% till 50% retracement is my buffer area. And from last couple of days, I've been telling you guys to wait until the price hit this area of value or forms a bullish engulfer. But with an aggressive entry, we had a nice massive push up. So let me show you what I've said in my last video so that you understand the conditions and the entries. Price did not hit my 50% retracement at this point, so we can still expect a hit of 50% retracement, and then the price can push up, or we can get a very next candle, a bullish candle. Target can be 180 or 1.618 retracements. Nice one. So exact push up happened. If you are my MMTA full course student, then you know all our rules are met, and with that we have a massive push up. And I've already mentioned this in my yesterday's video to set up your limit order if you are an aggressive trader, and I've also said that the targets will be 1.618 retracement, and price is now heading towards the target. At this point, I'm still expecting a push up out of gold, not selling gold at this point. Yes, we can expect few red candles before the price will push up again and hit this next major level of resistance, which is at this point. Let me readjust this zone quickly for you. Right, so back on 4-hour time frame, we have the zones ready for you. It's 1949.98 goes up to 1980.24. This is the zone from where we are going to take our sell counter trade with bearish engulfers or with a double top entry pattern, and the pin bars or a 382 candle is also one of my entry conditions to take my sell trade out of this area of value. So keep an eye here and have these zones on your charts. Once the price hit this zone, we are going to take sell trade. Till then, wait, we might get a pullback of few red candles and then possible bullish engulfer for another long trade. So that is it for the gold. Let's move on to crude oil. So crude oil has broken below the level of major support. At this point, the price is now falling down, and now we can expect a pullback and retest of the previous zone that has now been broken. But we can calculate the pullback exactly the same as we did for the gold. And so if the price pulls back up, we can expect a 50% retracement, and that can be your limit order if you are an aggressive trader, which is 69.18, a zone from where we can expect another fall if the price push up without hitting this next major level of support. If that happens, then we can expect push down from here, or we can expect a retest of the previous zone that has been recently broken. But if the price continues to push down, then you have a next major area of value, major support zone, which is 61.63 goes up to 65.21, a zone from where we can expect a pullback or a push up, that is enough to hit of a buy target. So once the price hit this zone, I will look for my bullish engulfers or my double bottom entry condition, or pin bars is also one of my entry conditions. So keep these zones on your charts. If you have a pullback without hitting this zone, then 50% retracement will be your pullback, or the recent level of support that has been broken, which is 70.55, from where we can expect another fall. So bearish for crude oil. So that is it for commodities, guys. Any questions, any confusions, please do not hesitate to DM me on Instagram. I'll get back to you as soon as possible. Hope you trade green. I'll see you guys in the next video. Till then, take care.